This crazy market volatility. Stocks are up today, but it has been a wild ride. What's your take on the market jolts we're feeling?
Yeah, I think I, like everyone else, I'm a little confused. Is it the return to the normal of a normal level of volatility, or is it a sign of the uncertain moment that we're at as to what is the direction of travel geopolitically and economically going into 2019? You can find any forecast you like out there. So I think what it's really a sign of is the degree of uncertainty that everyone has. But what we have to do as a company is focus on what we can control. We've got a great strategy, we've got a game plan, we've got to execute it, and we will see our way through what I think will be a very interesting 2019.
I know that's the message you're here to tell, but you also have a pretty good view into consumer spending. Have conditions deteriorated in the U.S. in the last few months since we spoke?
I think you saw coming out of the summer, it became a little softer as it got into September, and so we did see a little decline in September. Obviously, we took some price increases at the beginning of the summer, so some of that wasn't entirely unexpected, given the process of some of the inflationary cost of goods and freight that's happened in the U.S. market. So I think some of that was to be expected. Of course, we'll see how that passes through the system. Often you get a reaction in the short term. But I think that the moment is uncertain, even here in the U.S. As
you look forward into consumer spending and the U.S. economy, what do you see in 2019?
Again, 2019, I think, is uncertain. You've got lots of forecasts out there, whether it's the U.S. or globally, saying there's going to be growth next year. Maybe not as much as 2018. A little bit slower, but still growth. Still growth in the U.S., still growth in the global economy. So we think the consumers are going to have the money, and so we're bullish on our plan.
Amid all the market volatility, your stock has actually done very well. It's a defensive play, up 7% in the last 3 months. Overall market down 8% in that environment, but you're also outperforming some of the other staples. What do you chalk the outperformance up to?
Yeah, I think we've had a good 2018. I think what people are starting to see is our growth story coming to life. We've now got 5 quarters in a row where we've had our top line in the range that we're looking for in the long term, with some good operating leverage turning into profits and turning into US dollar earnings. So I think people are starting to see that we're getting traction coming off the refranchising, the selling of our bottlers, coming off the reinvestment in sparkling, and as we lean forward into a broader portfolio, we're starting to get the growth that people want us to start driving, and I think that's coming through in the stock.
How do you keep the momentum going? Wall Street is also a big fan of the total beverage strategy, some of the deals you've done. What are you telling them to keep them excited about all that?
I think we're talking about our discipline of building out the portfolio. I mean, consumer brands are not created overnight. They tend to take some gestation period of time to come around. We've got to have a disciplined approach to building that portfolio around the world. If we stay consumer-centric and work to create value for the retailers and the customers we sell to, we can continue to make this story happen into the future and incorporate some of these bolt-on acquisitions that we've made.